Welcome to the Options Trading Desk. In this video, we're going to be taking a look at intrinsic and extrinsic value. When we trade options, the price that we buy or sell at is made up of two distinct parts. The first part is intrinsic value. The second part is extrinsic value. If we add both parts together, we will get the total price. Let's take a look at the intrinsic value part first. Intrinsic value is the difference between the strike price of an option and the underlying asset price. For example, let's imagine a company called XYZ. XYZ stock price is currently trading at $167.50. Let's also assume that we own a call option with a strike price of $150. Because our strike price is in the money, we could exercise the option and own the shares of XYZ at $150 per share. We could then immediately sell the shares at the current stock price of $167.50, giving us a profit of $17.50. So the call option has an intrinsic value of $17.50. Now, let's take a look at extrinsic value. Extrinsic value is the premium you pay to own the option. Imagine we are about to make a purchase of a new call option in XYZ company for $22. If we follow on from the previous example, we know the current stock price is $167.50, and we are about to make the purchase of a call option with a strike price of $150. The intrinsic value of the option is still $17.50, but the total purchase price is $22. That difference between the intrinsic value and the total purchase price is the extrinsic value, or the premium you pay to own the option. If we add the intrinsic to extrinsic value, we get the total purchase price of the option. Let's take a look at the options chain for Apple stock on screen. We can see at the top of the screen, the current trading price is $230.68, highlighted in white. We have chosen the $220 call option. In the two columns on the left-hand side, we can see the intrinsic value of the option, highlighted in red, is $10.67. We can verify this by subtracting the strike price of $220 from the trading price of $230.68. We can also see that the extrinsic value, highlighted in yellow, is $7.85. We verify this by subtracting the intrinsic value of $10.67 from the purchase price, highlighted in blue, of $18.50. There is a 2 cents difference in the formulas due to the fluctuations of the stock price and the purchase price. At expiration, an option can only be worth whatever its intrinsic value is. So let's imagine we had bought the call option shown in the last screenshot, but Apple's stock price did not move for 85 days and was still trading at $230.68 at expiration. The intrinsic value of the call would still be $10.67, but the extrinsic value would have decayed as the option got nearer to the expiration date, and we would have made a loss of $7.85. Thank you for watching this video about intrinsic and extrinsic value. Please like and subscribe. See you again.